Hello there, I'm Diabosito with your market news for now. Asian shares markets followed Wall Street higher today as expectations for a rapid-fire U.S. rate cuts promised to lower borrowing costs globally, a relief to stressed bond markets and also a drag on the dollar. Chinese stocks edged about to a fresh decade high, while renewed AI optimism that we saw yesterday also drove Hong Kong shares to a 4-year peak. The Shanghai Composite Index added as much as 0.4% to 3,892 and 73, while Hong Kong's Hang Seng added a 1.5% to 26,484 and 65 cents, while Japan's Nikkei climbs 1% to another all-time high, just like yesterday. Wall Street's main indexes notched record high closes on Thursday following gains in Tesla and Micron Technology. U.S. inflation data and jobless data also fueled expectations that the Federal Reserve will cut interest rates this month. U.S. consumer prices rose more than expected in August, and the annual increase in inflation was the largest in 7 months. Futures trading indicates traders are certain that the Fed will cut rates by at least 25 basis points at its next policy meeting, which is next week, with about 7% chance of a deeper 50 basis point cut. The S&P 500 gained 0.84% to end at 6,586 and 74 cents. The Nasdaq Composite Index gained 0.7%, while the Dow Jones Industrial Average rose 1.35% to 46,104 and 89 cents. Back home, the all-share index is 0.4% higher. It's currently sitting at 104,389. And when we look at our currencies for this lunchtime, the rand is sitting at 17 rands 36 against the dollar. It's at 20 rands 36 against the euro and 23 rands 53 against the pound. Let's look at your commodities. Gold sitting at 3,649, pretty much where it was yesterday. Dollars an ounce, while platinum is at $1,392 an ounce, and Brent crude oil sitting comfortably at around $66.71 per barrel. All right, our market analyst to wrap the week for us is Andre Brink from Absa Investments. Andre, welcome to SABC News. Thank you so much. We're trying to get Andre, but we're going to be speaking to her about the week that was. You'll remember that this week locally we had those GDP figures that came out at 0.8%. Certainly a little bit higher than what a lot of analysts had expected. Most of those that I spoke to, they were expecting between 0.6% increase in the number of GDP figures, and so that came in a little bit higher, and I'm quite keen to hear what Andre Brink from Absa Investments is going to be telling us about what they are penciling in, particularly for next week. We know that next week we have the Monetary Policy Committee meeting sitting. We have those inflation figures coming in, and we also have retail figures coming in.